right, welcome back. You're watching The Money Show, and it's time to answer your portfolio queries and any aspect of your financial portfolio, be it your financial goal or anything related to your financial strategy that you might want to get answered. You can do that today because we have Kirtan Shah from Credence Wealth, answering all of your queries for us today. Kirtan, good evening and welcome to the show. Let's begin our viewer queries segment. I think I have Mr. Pradeep Kumar's question via email with me today. He says that he's 41 years old, currently living in UAE. He started investing in mutual fund in 2020 and his mutual fund portfolio has Parag Parikh Flexi Cap, SBI Focused, SBI International Access US Equity, SBI Small Cap, Nippon India Growth Fund and Nippon India BSE Sensex Index. He's called Motilal Oswal Large and Mid Cap, UTI Nifty 50 and Access Mid Cap. And the value of his portfolio, he says, is 16 lakh and he's got equity stock worth of 10 lakhs and 4 lakhs is his fixed deposit. And he's got some amount in gold, 40 lakhs worth of apartment and 90 lakhs worth of land in Chennai. He's planning to get retired with a corpus of 10 crores in 19 years. He would like to increase the SIP from 33,000 to 1 lakh per month. And he wants you to review his portfolio. And yeah, that's about it. I don't have you on the phone line. We could have taken much more clarity, especially on the fund mix. What kind of an investor you think he is looking at the fund mix?
Kavita, first of all, thank you so much for having me on the show. I think Pradeep is very well diversified. And I love the detailing with which he's actually written the question, where he's given the breakup of everything from gold to land to real estate, everything that he holds, right? I think very quickly, 4 lakhs that he has in FD is good and he should stick with that because that can be used as emergency corpus. I think if I put the equity component together where he has 16 lakhs in mutual funds and another 10 lakhs of stocks, that 26 lakh plus roughly a lakh of rupee of SIP that he intends to do for the remaining 19 years. The good part is that at 12% assumption, he probably will get the 10 crore that he's looking at. So if he just continues to invest whatever is available right now and the 1 lakh of SIP, the goal that he intends to reach is probably going to be easy and can be taken care of at 12%. The only suggestion that I would largely have is he spread across slightly more number of schemes versus what I would personally be very comfortable. I'm somebody who believes that, at least a 4 or 5 schemes across different market caps and style of investing will solve the purpose. You don't really need 9 funds. So I'm going to suggest Pradeep to exit out of 2 funds, SBI Focused and Motilal Oswal Large and Mid. The objective here is not to say that these funds are not good, but if you see his exposure to SBI as an AMC is slightly on a higher side, and also when you look at his portfolio, he's got decently invested on the large cap space with respect to index investing, and hence the exit on the Motilal Oswal one. So if he exits these two and makes sure that the money is equally divided amongst the remaining 9 funds, I think the journey is going to be smooth for him.
All right, Kirtan, since I don't have him on the phone line, I just hope that all of his queries are really answered by the explanation given by you. But then I do have a viewer on the phone line with me, Mr. Thirumeni. Hi, good evening. You're calling from? All right, sir. All right. Okay, so you've been investing in since last 2 years, and you want to make 25 lakhs in 5 years. The funds that you have are HDFC LSS, HSBC Infra, Axis Mid Cap, HDFC Small Cap, and ICICI Pru Mid Cap. Is that right?
Yeah.
All right. Are you able to increase your investment amount, sir?
No.
That's it? You won't be able to step up your SIPs?
Yes.
You can? By how much?
How much is now? Now I am investing regularly nearly 16,000.
You're investing 15,000, 16,000.
Yes.
In these funds?
In these funds, I already sent that.
Sorry?
I already yesterday sent in WhatsApp the funds which
Right.
I am in.
Okay, so let's just stick to this portfolio, and you're saying you're investing 16,000 in these funds itself. Is that right?
Yes.
Okay, all right. Kirtan, over to you. It's the same fund mix and 25 lakhs in 5 years.
I think I have some bad news for the caller because probably everything that he's intending to do will be slightly on the shorter end. Because if you do a 16,000 rupee of SIP for another 5 years at 12%, you will only be able to accumulate half of 25 lakhs. You will have to double your SIP from 15,000 a month to 30,000 a month to be able to reach 25 lakhs in 5 years. Of course, you might not be able to do it immediately from a 15 to 30, but the best way to do it, if at all you can't do it this way, is to step up your SIP over a period of time. But the problem with step up in this case is that you don't have a very long time frame. It's just 5 years within which you want the desired result, and hence your step up will have to be very significant, like a 30-40% jump year after year. So either you increase your SIP from 15 to 30 directly, so that you are able to reach 25 lakhs in 5 years, or you will have to step it out very aggressively. That's one. Second, when I look at this portfolio also looks extremely aggressive to me. So out of the five funds that are there are three funds which are mid and small. One is a sector fund, and another is an ELSS, which I'm assuming is done towards only ATC and is not the core part of the portfolio. So if you see, the entire portfolio mix is mid small and sector, which is extremely difficult at this point in time to judge whether in the next 5 years or not this portfolio will work, because markets already are significantly higher over the last 2-3 years. Mid cap, small caps have performed very well, and I think the portfolio needs to change a little to make sure that with just 5 years of investment horizon, you cannot have so much of exposure to sector, mid, and small, because it will require at least 8-10 years of investment horizon for this portfolio to continue. So I would suggest to exit HSBC Infra, and versus that to add Nippon Large Cap, but try and make sure that between Nippon and the HDFC ELSS, you have probably at least 40-50% of the portfolio, and the remaining 40-50% in the other three mid and small fund.
Any specific reason behind the changes that you've recommended, Kirtan? What's the kind of rationale? You think the risk increases just because it's 5 years time horizon? He should not be up for this kind of a risk in his portfolio?
Yeah, Kavita. So there are two reasons. First, like I spelled out, I think 5 years is too small a time frame for you to do probably 40-50% of your investments into a sector and small cap funds. If I add mid cap, then the portfolio probably is 80% in small, mid, and sector. 5 year time frame is too small for me. I think the minimum that you need is at least 8 year kind of an horizon for you to do this kind of investing that the current portfolio is. And also, while we were talking to the investor, what we understand is that his requirement is slightly higher, time frame is a little lower, and I'm assuming which is why probably he's invested a lot of money in small and mid so that he is able to reach the goal well. I'm not sure if that's a good strategy.
Let's move on and let's take Sanjeet Ruben's question. And he wants your expert advice on his holdings. He's doing SIP in 3 mutual funds: Parag Parikh Flexi Cap, Kotak Small Cap. He's got Kotak Emerging Equity also. And given the current market condition in small cap and mid cap valuation, he's been thinking whether it is good to book profits in his small cap and mid cap and switching it to some other fund and other category. And he wants to know if Kotak funds are good to hold for a long period of time, or are there any better names that he can switch to. I think that's very good that he's been thinking about valuations and exposure in a risk market cap, which is mid cap and small cap. But then also just help us understand, although it's not a bad idea to book profits if one has a vast and a diversified portfolio. But even if someone is glued with a portfolio for a longer period of time, say 10, 15 years, how crucial would it be for, or how tactically it is important for them to book their profits from small cap and mid cap funds right now and maybe shift that portion into a large cap?
I think, Kavita, in my opinion, if this question is related to somebody who's a retail investor, I would rather suggest not to try and time the market because most of us will not be able to do that. To give you an example, you and I both know over the last 12, 18 months, I read commentary every day of how expensive the markets are, but the markets have always been rising, not just for the last 12, 18 months, but for the last 24, 36 months. The point that I'm trying to make is yes, valuations are decently priced. Mid cap, small cap probably is slightly higher in terms of average over the last 5 years of valuation. But when markets are liquidity driven, rate cut is around the corner, and various other things happening that are benefiting India, like what's happened in Russia or what is happening in China, there is a very large component outside of basic valuation that probably is and can drive the markets. And as a retail investor, a lot of us will not really be able to time the market well, because while you time the market, you need to be good on two fronts, right? Whether or not this is the right time for me to sell, and very importantly, when and how do I reinvest that money? Most of us cannot get one leg of the timing correct, but we are trying to time it twice, which is not going to be easy for most of us. So I would sincerely suggest Sanjeet that if he has 8, 10 years of investment horizon, to not try and time the market because he thinks mid and small is expensive. I think it'll automatically play out if he has 8, 10 years of investment horizon. But of course, I would suggest him a small change to move out of Kotak Emerging to a Nippon Growth and add a Mirai Large and Mid to the portfolio, because what that will do is bring in the large cap component, which is slightly missing in the portfolio at this point in time.
All right, Kirtan, once again, I don't have Sanjeev on the phone line, otherwise we could have just advised him or maybe asked more questions. So you've recommended replacement, the Kotak Emerging with Nippon Growth and add Mirai Large and Mid Cap to his portfolio. Is that right? I'm just confirming again.
Yeah, absolutely correct.
Sure, sure. All right, Kirtan, with that is the end of the show. Thank you so much for taking time out and helping our viewers with their financial portfolio queries live. Thanks.
Thanks for having me.
All right, I'm going to sign off, but leaving you with our WhatsApp number and email ID where you can send across your questions. And do send us all the details of your portfolio and try and join us live so that you can also ask more questions, in fact, live to our experts also on the show. Thank you so much for watching. Goodbye.